Good afternoon and welcome to our panel, Unleashing the Power of Crypto ETFs, Riding the Innovation Wave in Hong Kong. So I'm your moderator of this session, Jupiter Jones, partner at HK Capital. So the introduction of US spot Bitcoin ETF marks a significant milestone in mainstream adoption of cryptocurrencies. So by offering investors a regulated and accessible vehicle to gain exposure to Bitcoin, these ETFs provide a bridge between traditional finance market and digital asset space. So investors can enjoy the benefits of direct ownership of Bitcoin without complexity of managing private keys. So this development of not only enhance the liquidity, but also the transparency, also paves the way for wider acceptance and integration of cryptocurrencies into the investment landscape. So I'm delighted to be joined by 5 leading experts in this field. The first up, we have Deborah Fur joining from online. She's a manager, partner, founder, and owner of ETFGI.
Hello.
Hello. Next up is Giovanni Deborah from Global Head of Cryptocurrency Products, CME Group. Next up is Jason Lai, Associate Investment Director, Digital Asset, Field Investment Management Limited. And also next up have Sean Francis, Senior Vice President, Head of Exchange Traded Products, Hong Kong Exchange and Clearing Limited. Also, finally but not least, Derek Wang, Managing Director, Head of Sales and Client Services, Basera Asset Management Co. Limited. Welcome to all, and thank you for joining us. We've got a lot to fit into 40 minutes. Let's kick off with setting the scene. So my first question to the panelists is, how will the advent of crypto ETFs reshape the future of investing? How are these trends between institutional and retail investors' interests affecting the crypto ETF market? So the question may come to Jill. You can take the question. Yeah.
Sure. Thank you so much, Jupiter, and thank you all for the invitation to join you today. So I'd say, much like with the introduction of CME's regulated and cash-settled futures contract in December of 2017, which really helped to pave the path for the eventual launch of Bitcoin ETFs, what the approval and launch of the spot Bitcoin ETFs in the U.S. does is really further legitimizes the space, right? What we're seeing now with these products, right, is like investors that sat on the sidelines, for example, that perhaps had fears of not understanding what Bitcoin was, perhaps didn't feel comfortable with opening up an account at some of the nascent, unregulated platforms. Now they have a familiar wrapper that trades just like any other ETF, trades like a stock, trades on a traditional brokerage firm, right? These firms don't need to now open up an account at a nascent crypto firm. They don't need to worry about opening up a wallet. They don't have the fear of say, having to memorize a phrase, forgetting those keys, losing their Bitcoin, and all that is essentially removed with the ETF. What the ETFs do is it really simplifies the process of getting the exposure to the price of Bitcoin in really a viable and trusted manner. Additionally, I think what we're seeing now, new participants come into the marketplace. So as these new participants come to the marketplace, we should anticipate further, say, price action, perhaps, say, further volume, right? And additional trading opportunities. In the States now, you've got 10 new ETFs, 11, I guess, if you also consider the grayscale product. But this presents a lot more arbitrage and trading opportunities to the community as well.
Thank you, Jill. Deborah, what's your opinion regarding the question? Thank you.
Yeah, so I would just add to what was said. I think the big change with the products coming to market recently in the US is we have now household names like BlackRock and Fidelity offering ETFs that provide exposure to Bitcoin, which clearly that changes the familiarity people have with the issuers. So I think that is very important. And when we look at where the new money has gone, those 2 firms out of the 11 have captured the majority of the net inflows. But we've also seen that the thought leaders in the crypto space who also do ETFs, like Kathy Wood, who spoke earlier, and also Matt Huggan, who is at Bitwise, their firms have also captured net inflows because they've been out there investing in these products themselves in terms of cryptocurrencies, but also sharing a lot of insights and understanding. So we really have seen that there's been really 4 firms that have captured the majority of the assets that have moved into the space. Grayscale has really had net outflows. So I think it's the familiarity of the issuers and the people behind the issuers, as well as the ETF wrapper. And what we see is, for many advisors, they're using model portfolios that inside of the models will be making allocations to different types of exposures. And I think that's going to be one of the drivers going forward as we see investors using crypto. I think many will be using it within models to help them think about how much money should they have invested in equities, fixed income, commodities. And I'm just adding to what was said earlier because I agree with everything that my colleague just said.
Thank you, Deborah. So, Jisoo, how do you see the question?
Sure, yeah, I pretty much echo with what all those speakers said. Is actually further solidify digital assets in the financial system. And the approval in the US Bitcoin ETF also serve as a reference point for the global regulators, where we see more recently some regulators, they start allowing Bitcoin assets for professional investors. And for Fidelity, we have a very unique journey in digital assets. Fidelity Investment in the US actually start into this space development and mining Bitcoin about 10 years ago. And they further incubate Fidelity Digital Assets, who start including or providing institutional grade custody in this space. So building on this foundation, Fidelity International, we also start supporting our clients in this space and building capabilities and launch our Bitcoin spot strategy in Europe about 2 years ago. So overall, we think there's a very positive momentum here. And from a distribution perspective, we actually also see some pickup in client inquiry from both APAC and European side. So for APAC, it's more from high net worth institutions, family office, and the European is more from the distributors, especially from the digital platform who target younger investors.
Thank you. So, Sean, what's your opinion?
I actually agree with what Deborah said around the ETF wrapper. I think the ETF itself has contributed significantly to the recent success of Bitcoin ETFs in the US. If we think of ETFs, it provides liquidity. You're able to trade on a recognized venue. It's something that, investors are very familiar with around the world. The second part is around access. You can access, not only Bitcoin, but a number of equities, commodities, and sometimes asset classes, which can be quite challenging to access for an average retail investor around the world. So I think the ETF itself has significantly contributed to the, success of Bitcoin ETFs in the US. And the final one is, specifically for crypto ETFs, I think it's just going to be another tool for investors to have more, perhaps, diversification in their portfolio. We talked about equities, fixed income, commodities. Well, now they can also incorporate, cryptocurrencies or virtual assets, as we call them in Hong Kong.
Thank you. And so my second question is, can we anticipate a surge in Bitcoin ETF volumes as more financial institutions strive to provide their clients crypto exposures? So this question goes to Derek from Becerra.
Yes. From a traditional asset manager's perspective, actually we just categorize cryptocurrency or crypto asset as a kind of alternative investment asset class. And if we look at the past performance of crypto asset, it do have a very less correlation with our traditional asset class, such as fixed income and equity. And it do have a very positive contribution to our multi-asset portfolio, especially if you look at its diversification effect. And secondly, given the recent global macro complexity, and especially we can see geopolitical intentions, heightened volatility, higher inflation, and higher interest rate, we think cryptocurrency do help our client to hedge against different kinds of risk, like geopolitical risk and other kinds of inflation risks. So from this perspective, we do think this will have a very positive impact on a traditional asset client's portfolio. And the second note is about how we look at this kind of asset class. If we just think that for the spot ETF or something like something similar, we can see like from the U.S. perspective, once the U.S. regulation just approved the ETF this January, we do see a very consistent inflow to this market. And because of now, like we have the spot ETF, it do give the access, we can see a very safe access to the traditional investment managers. And now we can speak in the same language and help this client to make investment and help them make the investment decisions, especially for a lot of our existing institutional clients, like large financial institutions and large corporate institutions. Maybe they have authorization to invest into the ETF, but they didn't have any authorization to invest into the crypto. So once the spot ETF come out, we can say there will be a very good way to help them to make allocation to virtual asset. So finally, after this note, we would say it is definitely yes. It can help us to increase, we would expect an increasing inflow to this asset class, especially from the traditional asset managers and the traditional financial institutions.
Thank you. Jisoo, what's your perspective?
Yeah, I think the increased regulatory clarity we've seen in Europe, in Hong Kong, and more recently in the US in related to Bitcoin products will further kind of foster the trust in the industry, and that will potentially drive greater adoptions from institutional investors. But I think whether we see an overnight spike, I'm not sure, but I see it more as a snowball process. For those investors who want to tap into the market a few years ago, they are unlikely to wait until the approval of spot ETFs. But for those who start paying attention to this space, they're likely to look for trust partners they can partner with. They're likely to look for education resources we can get through. So Fidelity, what we are committed is to want to offer the tools that we can support their choice and provide security access to them.
Thank you. Deborah, what's your opinion? Thank you.
Yeah, so I think the wrapper of the ETF is really very compelling. If you think about it, we have $12.25 trillion invested in ETFs, and we've had 58 months of consecutive net inflows into ETFs. So it's almost 5 years. There's no other product that can say that. And when you think about the users, half of the users are institutions, including sovereign wealth funds, asset managers, pension funds, hedge funds. There are also financial advisors that use it and retail. So the wrapper is used and it's very democratic. And so I think the wrapper is really important. And I go back to, JF will know this quite well, you know, when the first ETF was listed in Hong Kong, providing exposure to the A-share market, 2823 that most people know, for many investors, they were concerned about being able to invest directly in those securities. But buying the ETF was being used by investors all over the world. It just made things easier. They understood the ETF wrapper. They knew that they could get in and they could get out. They knew how to do it. And so I think for the experience here with Bitcoin and other cryptocurrencies, what we're seeing is very similar. And we have ETFs, as you heard from Giselle, you know, there's ETFs listed in Canada, they're physical. We also have them listed across Latin America. We have them in Europe. So they are expanding, but I do think the US is always an important kind of metric where people look at what's happening there, because you do see a greater use by retail investors in the US where they don't have to pay a commission when they buy and sell securities or ETFs, and they are very familiar with using ETFs. 80% of retail investors that use ETFs say it's their preferred wrapper. And I think that's why wrapping cryptocurrencies into an ETF is actually an important step forward, although, as we heard in the prior kind of keynote, for many it seems counterintuitive.
That's sharing. Jill, what's your perspective to see the surge of volume?
Yeah, I'd say 100% surge of volume, and I think that the market is already seeing that. It's hard to predict what happens in the future, but if we just look at March volumes across the new spot ETFs in the U.S. exceeded a little bit over 110 billion, right? That was more than 3 times the volume that those products saw the month before. Now, does that pace continue? It's really hard to tell. But what it's leading to is also, say, increased volumes on the derivative side, right? If we look at the volumes at CME's Bitcoin futures suite, you know, in March, we traded a little bit over 130 billion, right? So that's about 20% more or so than the ETFs, right? If we look at volumes on a daily basis, we're averaging about $6 billion per day on Bitcoin futures. Last year, we averaged 1.6 billion. So we're really seeing a huge increase in volume as a result of these new products coming to market, and now liquidity providers finding trusted, reliable, liquid futures products to hedge some of that activity. You know, additionally, 6 of the new ETFs are benchmarked to the CME and Crypto Facilities Bitcoin reference rate New York. That is a reference rate that publishes at 4 p.m. New York time. And now what we're seeing in that window between 3 to 4 p.m. New York is we're seeing a really big increase in volume in that hour alone, where now about 20% of a day's volume is transacted in that hour. And the reason for that is market participants now, or liquidity providers, using our products to hedge some of that activity around providing liquidity to the ETFs that publish their net asset value at 4 p.m. New York. Additionally, we're seeing a growth on our micro contract. We have a 1/10 of a Bitcoin contract. And what's interesting there is that as the price of Bitcoin has risen, and now our large contract is almost a 300,000 notional size contract, the micro contract is much smaller. So liquidity providers that are hedging the ETFs, when you look at the average ETF trade size, it's about 20,000 US. So a liquidity provider could easily use our micro contracts to hedge that by trading 2 to 3 different micro contracts. So really what we're seeing, as the ETFs grow, so too will the derivatives market. And it's really very much a symbiotic relationship.
Thank you for sharing the product and hedge the risk for ETFs. So my third question is to compare the ETFs and direct holdings. So are spot crypto ETFs are more secure investment options compared to holding Bitcoin in crypto wallets, or do they come with a similar risk? So also the question goes to Derek.
Yeah. Well, basically I would say a direct ownership to the Bitcoin maybe have a lot of trade-off and a lot of some potential risk, like how you hold it. What if you lose your private digital wallet or something like that? But for the crypto ETF, especially for a spot ETF, actually it created an ecosystem that can be linkage from the whole crypto asset to the traditional financial market, which means that we can share the same language within an ecosystem from the whole investment management process, from the traditional custodian, investment management, risk management, and other like reporting system. So within this whole traditional ecosystem, people from the traditional investment management space can freely understand this asset and can invest into this asset class with some protection from the regulators. More specifically, we can see for this kind of ETF, especially in Hong Kong, we have a lot of insurance to cover different stages. So making this investment more institutionalized, which is very important for a lot of institutional investors who need to tick their box when they make the investment decisions. So once this come out, I would say like it will be more secure, especially for some people that they have never touched these sectors before. Not only to the institutional investors, but also for the retail investors and the mass market in the Asia Pacific as well. For example, we have a lot of distributors who always want to find a way to participate into this market, but they have very limited access because they have their own internal risk management system, and they can only understand this asset class when it has a wrapper, what our guest just mentioned. And once we have this kind of wrapper, it will provide a more secure way and a more secure environment to help the end mass market and end retail investors to participate into this market.
Thank you. Gio, what's your thoughts?
Yeah, you know, I think while the ETF simplifies access, I think you have to remember that the underlying is still Bitcoin, right? So it's still going to be subject to the same volatility. It's still going to be subject, say, to the same event news, right? So at CME Group, we're providing products really to help market participants mitigate some of that risk, right? But I think top of mind for all crypto investors really should be reliability, transparency and liquidity should be top of mind for anybody that's looking to invest in this space. And we're seeing, say, more and more participants come to the space as a result of these newly launched products. And I think that it's a trend that's just going to continue.
Thank you. Deborah, can I hear your opinion? Thank you.
Yeah, so maybe just adding to, I agree with everything my colleagues have said. I think the important thing to think about is it took the products in the US, the first time they tried to file to launch products was in 2013. So the ecosystem, all of the firms supporting it, as well as the regulations, have been analyzed for many years. And so you're putting crypto, which I agree with what Giovanni just said about the underlying is still going to be volatile and move around, but you're putting it into a wrapper and within an ecosystem where you have custodians, you have trading firms, you have exchanges, you have pricing sources. And so I think that adds an extra level of comfort to many investors. So I would say that the same is true when you look at Canada. It took them many years to convince the regulator that putting crypto products into an ETF wrapper would be better than leaving it the way it was. And so I think the educational process of regulators to get crypto products to market, even in Europe, I remember Amoon, which is now 21 shares, it took them probably close to 4 years to get the Swiss regulator happy, and then it moved across Europe. So I think educating regulators, which is probably one of the more challenging things to do, has taken a long time. And so that means that the way the products have been developed is very robust. I mean, you should go and check the products to make sure you're happy with all the firms and what they're doing and who they're working with. But I would say that that's one of the huge benefits of putting this inside of ETFs.
Thanks for sharing, Deborah. And also the question goes to Jessel.
Yeah, I think both methods come with their own features and trade-offs. So for holding a spot ETF, for example, is a convenient, easy access way with third-party custodian to help to secure your assets. While the limitation is you can only trade during the stock exchange hours. But for the direct holdings, you can trade 24/7 around the clock. But the trade-off could be for institutional investors, they may need to set up their own infrastructure, which come with additional costs, and they also need to learn about the nuances in terms of the crypto cyber security and management, for example. And I think I also want to dive deeper because I think in these questions we tend to just bucket Bitcoin ETFs in one go. But I think investors is important for them to understand or study the difference among these features, as Deborah kind of lightly touched on earlier. For example, what are the product features in these issuers? How is the track record to be? And custodian is arguably a very critical component when it comes to Bitcoin ETFs, how the crypto is secure, whether it's regulated, and how the client assets are securely stored. So these are some common questions that investors may need to do a little bit more study. Another area will be around the cost. So there are various types of crypto ETF in the market. It can go below like 30 basis points in terms of management cost up to 2.5%. So again, investors need to do their own study to find a more cost-efficient way to gain this access to this asset class. And beyond the product features, trading location is another way to consider, given now the crypto ETFs have domicile in multiple countries in the US, in Canada, and in Europe, for example. So what are the trading hours that could influence some of the investor decision making? And finally, taxation could be another areas to look into. A very complicated topic, yet an important topic for investors to navigate what are the most efficient way for them to access to this asset class.
Yeah, thank you. A lot of things you need to consider. So let's talk about Hong Kong. We all know that Hong Kong will have a crypto ETF scheme, and also SEC has a circular to address that scheme. So my first question is, following the launch of the first crypto spot ETF in Hong Kong, what can we anticipate as the next development? So GF, I think you are the right person to address that? Thank you.
Yeah, sure. So maybe before looking forward, we can look back, right? Deborah mentioned the launch of the first ETF, actually almost 25 years ago. So this year we celebrate the 25th anniversary of the first ETF in Hong Kong. And since then, there has been a number of innovations in Hong Kong and in the Hong Kong ETF market. In the first 10 years, ETFs were a great tool to access China A before the introduction of Stock Connect. More recently, we had the introduction of leverage and inverse product, thematic ETFs, commodity ETFs, and even crypto, right? We were talking about futures. Hong Kong has crypto futures-based ETFs since 2022. So we have had this product for more than 1 year. They have been growing. We have seen increased adoption from different segments. So I think already looking back, there is a great journey of innovation in the Hong Kong ETF market, and looking forward, obviously, pending approval from the regulator, we look forward to welcoming the first spot VA ETFs in Hong Kong, and I very hope that it will also be in Asia.
Thank you. Hong Kong is a very promising land to launch innovative products, I think. Okay, Derek, can you address well?
Yeah, I would say it will be just the start of the beginning for the whole crypto asset management in Hong Kong, because we can see like Hong Kong already provided a very supportive and proactive environment for the development of crypto asset management in the whole industry. And basically, I would say like going forward, maybe we would expect a lot of things on top of the only crypto spot ETF. For example, now we can see like maybe it is a single cryptocurrency ETF only for now, but going forward on the ETF space, maybe we can see a lot of like different in the ETF like can track a basket of crypto ETF. And then further going forward, maybe we can see under different SFC types license, like type 4 and 9, we can see a lot of other different strategies related to the crypto asset. For example, maybe we can see a lot of thematic fund and active managed fund and something like that. And going forward, once we expect the spot ETF launched in Hong Kong, if the liquidity and the trading volume is really very good, maybe we can see a other side market on top of the derivative of the spot ETF in the OTC market. This is also what we can expect going forward. And secondly, I would say like along with this kind of different things, we can see like on top of the passive ETF, also we can see some active management strategy going forward as well.
Yeah, thank you. Thanks for sharing different ways to access ETFs. Okay, so let's come to maybe the last question. How to access crypto ETFs products in Hong Kong or the world? Deborah, I think you're a top expert in ETFs. Can you share a little bit on that? Thank you.
Yeah, sure. So there are ETFs listed on many exchanges around the world. And what you heard from Derek, I mean, if you look at what's available in Europe today, we have exposures to Ethereum, Bitcoin, Cardano, Maker, Avalanche, Binance, Polkadot. We have actively managed strategies. We have index-based strategies. So I think the big challenge is, I'm sure people in the room know a lot of these different cryptocurrencies, and there's a longer list than what I've even said. But I think the challenge is for many, you have to make sure that you understand what are you gaining exposure to. So just because something's out there, make sure you understand what is the exposure that you're getting, how is it being made available, what is the annual cost, as Giselle said, who is the custodian and ecosystem around it, and then they just trade and settle like any other security. So I think that the wrapper and the exposure and getting access is pretty easy, but I do think you need to think about why are you investing, how much are you investing, and making sure you understand what is the product doing, because we do know that investing in cryptocurrencies is typically more volatile in performance than what you would see in, say, an S&P 500 exposure. But otherwise, it's very simple to gain access.
Well, thank you. GF, what's your idea?
I agree with what Deborah said. While access is relatively simple, and we have seen that in Hong Kong again, we launched the first VA futures ETFs at the end of 2022. Looking at the most recent stats in March, they were trading on average per day 50 million, which is 5 times more than last year. So we have seen more usage, more traction for the exposure. Now, back to understanding the product, it's critical to look, especially, when and if spot VA ETFs get approved and get listed in Hong Kong, it will be important for investors to look at the products, what's inside the product, how am I getting, the performance of the underlying asset class. I think that will be really important more than actually access, because again, I know that there are many platforms and brokers in Hong Kong that will work very hard to, fulfill regulatory requirements in order to be able to offer these products to their client base.
Thank you. Thank you. I kind of ran out my questions, and we're a little bit ahead of time. So I think the last part, so let us graciously conclude this discussion by inviting each panelist to share their final remarks. Let's start with Deborah. Thank you.
Sorry. So I guess everyone's going to be watching what the SEC does in terms of allowing further products to come to market. I think the view is it's not likely that we'll see any new products come to market, partially because of the upcoming election, but I think also because I think the SEC got pushed a bit to launch or allow the launch of the Bitcoin products because of the court case. So I think they're going to move slowly. I think likely we'll see new products in December. We're continuing, though, to see innovation happening across Europe in terms of new products, new ways that the products are being used. We saw just 2 weeks ago that the FCA is finally going to allow crypto products to be listed in London, only though for professional investors. So I think educating regulators and getting regulators comfortable with crypto is still something that all of us need to work on, such that products can be made available in the right wrappers and that there is education for everyone to make sure they understand these products.
Thank you. Jason, what's your last remark? Jason. Yeah.
So yeah, I think it's overall is a very exciting time, but overall it's still just a beginning for this asset class. And for Fidelity, our long-term vision is to be a gateway for digital assets investing for our clients by providing a very secure assets as a credible and trust partner, relying on kind of the all-rounded Fidelity ecosystem from bringing in solutions, bringing custody and research expertise that more clients are looking for these days.
Thank you. GF, what's your last remark?
I'm probably going to repeat myself, but ETFs are a great tool for liquidity, access, diversification purposes. So again, hoping for the best, hoping that we do get some of these spot VA ETFs approved by the regulators, and so that we can welcome them and hopefully become the first exchange in Asia to welcome these products.
Thank you. Turns to Jill.
Sure. Look, markets are uncertain, right? And we certainly have seen that the crypto markets have demonstrated historically boom and bust cycles, right? So it's difficult to determine what's going to happen in the future. But one thing that I am certain about is that CME's suite of regulated, reliable, accessible, and highly liquid suite of Bitcoin and Ether futures and options can help both institutional and individual investors really manage that risk, gain exposure, or even opportunistically trade.
Thank you. Derek.
Okay. So basically, I just would like to say we are very bullish in the to the Hong Kong market, especially its development in the crypto asset management. And as one of the largest Chinese asset managers, we are also always committed to develop and provide a lot of most frontier solutions to our global investors and China investors as well. So going forward, we are thinking like within this market, we would offer a lot of solutions, not only limited to crypto spot ETF, but also the like ETH. Maybe I would say it will be the first one in the world in Hong Kong that will have spot ETF, and also other kinds of crypto-related solutions. So basically, I would say it is just the start of the beginning. And going forward, not only to the North American or European market, but also starting from Hong Kong, we would see the Asia Pacific market will have more and more solutions that can satisfy the client's need and demand. So within this trend, what we would do is to do the most efficient and risk-controlled product and offered to all of our clients.
Thank you. So we'll wrap up here, and thank you so much for our distinguished guests, our panelists joining us, sharing their expert and knowledge with ETFs products with our audience here. Thank you for joining us. Thank you for the time.